Welcome to another day in the Matrix, waters above crypto. We had a nice little pullback yesterday and today to key levels of support. As mentioned in my last video, I told everyone about keeping an eye on yesterday as a date of importance to expect some volatility, and we watched it unfold. So in today's video, I'm going to quickly recap the numbers we went over in my last video and also a new Gematria decode, and then move into the charts of Bitcoin, Ethereum, and XRP. Also, I'm still running that holiday sale on both of my courses until New Year's Day. We have a couple days left, so if you're interested, stick around through the intro and I'll share all that information in a moment. So if you're new here, we do cryptocurrency technical analysis and combine it with Gematria Numerology and Astrology to understand these markets. Feel free to subscribe and turn on the bell notification to stay updated on when new videos come out. And make sure to give this video a like and share this channel with other conscious beings to help grow this community. And as you heard earlier, I'm currently running a holiday sale on both of my courses, the Mastermind course and the Advanced Trading course. So for those of you that want to learn how to do technical analysis and combine it with Gematria, there will be a link in the description box of this video and in the pinned comment below to my website watersabovecrypto.com/redpill2021, and that link already has the discount automatically added to the price, so there's no promo code needed at checkout. All you'll need is the link and you'll be able to get access to my courses with the holiday discount included, and this sale will be live until New Year's Day. With that being said, let's take the red pill. So in my last video, we were discussing today as a potentially key important date alongside yesterday, with a lot more emphasis on yesterday, and I'm just going to quickly recap the reasons why. So yesterday was 111 days since the last day of Rosh Hashanah. So Rosh Hashanah was the 6th through 8th of September. And if we measure over there to yesterday, you can see that's 111 days. And then also it was 22 days since the last day of Hanukkah. The last day of Hanukkah was the 6th of December. And you can see that right here when I measure over, that gives us 22 days. So it was 111 days since the last day of Rosh Hashanah and 22 days since the last day of Hanukkah. And another key important date was the 19th of May, and measured over to this day gives us 223. And I shared with you that this 223 is the reverse of the 322, which is the Skull and Bones secret society. Another important thing about this day was that it is exactly 3 months and 22 days since the date of Rosh Hashanah, the start of the Shemitah, the sabbatical year. So that 322 back to back. We had it yesterday being 223 days, and then today being that 3 months and 22 days. Full completion, as above, so below. So this was important, and we did get a new low today on the prices. A nice little spring back so far. I believe I saw Bitcoin drop down to about 46,600. Right now, as I'm filming this video, it's about 47,800, so it's bounced about $1,000 or so. But remember in my last video, I was actually discussing this 55 number. I was talking about the 55 SMA, the simple moving average right here, and how it was right around $55,000. And this 55 number comes back to Satoshi Nakamoto using Gematria. And we could see it in the Chaldean cipher, the most pure cipher. It's also in the full reduction, but Chaldean we always pay more attention to. And this 55 number was very powerful, and I was just kind of making a joke about the 55,000 being around the 55 SMA. And it's really interesting because if we go through the local high, which was around $52,100 or so, depending on the chart we were looking at, and then if you take it to the low that happened today, it was 46,600. That's a $5,500 swing, 5.5, coming back to 55. So it's amazing how you could actually use this code to determine a lot of what's going on in price action. And I've showed this before with even the price percentages, the price movements, the dollar amounts, everything comes back to Gematria Numerology and Astrology. It's absolutely fascinating. So it was just funny how in my last video, which came out, I believe on the 27th, I was sort of talking about this idea of the 55,000 level because of the 55 SMA and the 55 1.5 connection coming back to Satoshi Nakamoto. And of course, from 52,100 down to 46,600 was a $5,500 move. So absolutely amazing how that all played out. Another thing that I've been looking at was the date tomorrow. So I had more information coming in about the 30th of December because it is the 11 date numerology, leaving 1 day left in the year. Now that 111 signifies new beginnings. It's a symbol of manifestation or spiritual awakening. So I've taught you all that this market is ruled by the sun and the moon, and I'll show you this in the code. Remember, we're talking about the 111 right now. Tomorrow being 11 days, the 11th date numerology, leaving 1 day left in the year, or the 111. And this whole market is ran on the sun and the moon. We got that 111, and it operates on computers. And we know this. We know this is the future. The computer giving us the 111, and this whole market runs on the New York time zone, the Eastern Standard Time Zone. New York giving us that 111. And this essentially is showing us that astrology is what influences everything in this market. And astrology, of course, giving us that 111. So this market is ran by elites who print the money, and these elites who print the money and design the economy and created the stock market, they are astrologers. They're born into bloodlines that practice this knowledge. So another important thing about this word astrology and this connection to 31. And remember, I've taught you, you could always perceive numbers like this. 31 is 3-1 or 3 ones, like 111. So it's amazing how this all connects, because we know that they're using astrology, the sun, the moon, the stars, and it's what they use to control. 31, finances. 31, all right? So they're using this system to control the entire economy. Remember, we were talking about the 111. That 111 perceived 3-1, 3 ones. And it's going to show up time and time again. Once you start decoding, you're really going to see how all these numbers come together. So what's going on here that's really fascinating is because the average investor is not aware of this. The average investor is not aware of how this market actually runs, which is on Gematria Numerology Astrology. All of those three things are significant. It's not that one thing is more significant than the other. It's that the more you learn about those three things, the better you're going to be at positioning yourself in this market, and the better your investment thesis is going to be, and the better your overall long-term strategy of investing will become. You will become a much more stronger investor. All things considered, having a leg up in your astrology knowledge will help you substantially. Understanding numerology and the rules of it and how it could be applied, and just completely getting your head wrapped around the meaning of some of the numbers. Learn what the numbers 1 through 9 mean. Learn what they mean in Hebrew. And then once you start putting this all together, it's going to be a huge puzzle that'll be so helpful and so useful, because this is what the elites are using to design their algorithms to run this market the way that they do. So what's going on here is the average investor is not aware of what's going on here. And the elites are using the market participants as batteries. They are using the investors' emotions as an energy source. That's very important that people learn this. So it's all about where you give your energy. And that's always been something that I've tried to push in my work, to get people to not be so emotionally invested in this. Save your emotions for real life. Don't use them in the market. And once you become grateful for whatever this market gives you, whether it's up or down, you'll start to actually be able to integrate all this knowledge and wisdom that I'm teaching you and actually implement it and utilize it in your day-to-day practices of how you study, research, and actually invest into this market. So anyways, let's see how the rest of this year plays out. I'm really interested about tomorrow, again, with this 11-1 connection, the 11 date numerology, and the 1 day left in the year, that 111. Of course, we have the day of New Year's, which will be the 1-1 date, 1-1, in the year of 222. So we're all aware that the 222 year is extremely important, okay? And we are in the Hebrew year of 5782. 5782, giving us that 22 in the Gregorian year of 2022, the 22 year. And this all has to do with resets, that 22. But what I wanted to really talk about with this date is we have this 44 as the date numerology, and then we also have that 8. So the 8 is the infinity symbol, the Taurus field. You could perceive it in a lot of ways, but the walk away from this, the big date that I want to discuss, and I don't have too much information about this just yet, but I just want to lay this out here, and perhaps some of you decoders in the comment section could add a little bit more to this, but it's the second day of the year. You know, very simply, we have it being the second day of the year 222 in the Hebrew year, reduced down to 22. But this connection that I'm going to make is really important. So for one, it is 117 days since Rosh Hashanah. This 117 is showing up in Bitcoin. The 117, or the reverse 711, okay? Anyways, this 117 we know is connected because of Rosh Hashanah, the start of Shemitah. And then we have the date numerology of 45, Bitcoin, in that reverse full reduction, giving us that 45. And then the standard date numerology of 9, BTC, the ticker symbol, giving us 9 in Chaldean. All right. So there's a lot to be said about this, but of course the day itself will be written internationally as 2-1. Okay, for January 2nd. That 2-1 comes back to 21, which comes back to Saturn. That 21, and we have 21 million Bitcoin in supply. We are more than aware that Saturn is Satoshi Nakamoto, the creator of the artificial sun called Bitcoin. All right, so this will also be a new moon, and we know new moon has a tie to Bitcoin through Jupiter. So we have new moon giving us that 9936. We could see that 36. If we keep our eyes there, we have Bitcoin giving us that 36, but then we also have Jupiter giving us that 36, and it's that 9936 connection we get with new moon. And this is all coming back to Isis. Okay, Isis is the moon. And what is substantial about all of this is the fact that we know this next year is going to be turmoil. There's been a lot of astrological change that are going on pretty much throughout this next 2 to 3 weeks, moving into around the 19th of January. So I'm really interested to see how this all plays out, particularly the month of February, because we have it being the second month in the 222 year. So we have the 2-2 date, which will be February 2nd. Then we have February 22nd, which lands on a Tuesday, which is obviously important. But in the immediate short term, this January 2nd date is something that I'm interested in because it being the 117 days between Rosh Hashanah and Bitcoin, of course, giving us that 117. And then we have that 45 connecting directly to the date numerology. Then the standard date numerology being 9, coming back to BTC, the ticker symbol. And then this being the second day of the year 222. Giving us 4 2s in a row. So let's see how this all plays out. Of course, yesterday was sort of the date that I was anticipating for the big volatile change, and I think things will kind of be steady. Perhaps tomorrow will just be balancing out, maybe keep these low levels, and then transition into the new year, where around price levels we're sort of at right now. I mean, in regards to huge volatility in the immediate short term, I really don't see anything until this transition of the 1-1-1-2. But again, it would be interesting to see how it plays out regardless. Bitcoin right now is at a level that is very base-like. It's low enough to be showing us that it's building a support level around these 46,000s, and anything lower than that, when we start getting lower than 45 on like a daily close, that's when things start to get a little bit awkward. But for now, this is just sort of par for the course. Whenever Bitcoin has a bigger correction, we've seen it pop up really quickly and then get rejected again, continue building out that base. What we could be getting is like a huge W pattern. We've seen this happen actually back here too. Anyone who remembers, we had these back-to-back eclipses going on in May and June, and those back-to-back eclipses actually did have a bull trap, which led to lows that actually had another double bottom. So what that would be akin to is, imagine this was our fake out, new moon fake out that came in a little bit late on this new moon, and this time maybe it came in a little bit early, and then what's happening now is we're stalling out for a little bit more to build a little bit of a base structure moving into February. So because of all the astrological significance that are going on between the last couple days, moving in through around the 19th or so of January, it would not be surprising if we get trapped in this area and create something that sort of looks like a rising parallel channel, where we have this sort of being our top here, and then we have this sort of being our bottom, which looks like a bear flag, by the way. So I'm really interested to see how this is going to play out. But let's get into the technicals, because that's what's more important. Let's see what we're actually getting in the charts and go from there. So we know we have the new moon on the 2nd. Typically, the new moons are considered local tops, but we've seen in a lot of scenarios that up to 5 days after new moons, we have our local tops as well. So because we're coming down a little bit on the lower end of the price spectrum right now, and we have the new moon coming in like 3 days or so, this is something to consider. And 46,800, or this 0.5 Fibonacci level, is very important right now. But then we also have this 200 simple moving average, which you can see is this green moving average right here. Now, we have a couple things going on. One, we see this pink trend line has been formed at the all-time high down through the rejection, then the third touch point before the larger correction, and then since we actually had a little bit of resistance going back on the 22nd, we broke out of it on the 23rd, and we've actually come down to backtest it for 2 days in a row. We backtested it yesterday. We also bounced down through it today, and not only did we bounce through that level of the actual trend line itself with the daily close outside of it yesterday, but we did come down as low as the 0.5 fib, like I just said moments ago. So this is telling us that it wouldn't be weird for us to build some support here, but we cannot confirm it as a official higher low until Bitcoin starts to break above 52K. So because we see that the 200 exponential right here and the 8 simple moving average are sandwiched between the 50 and the $46,000 levels, like pretty much this area right here, it's going to be the noticeable trading range moving forward. So if Bitcoin was to break out, theoretically, and it was going to break out to, you know, maybe 50, 60, whatever, and then come back down for one last larger rejection, this would sort of be the area that you would anticipate to hold. Kind of like when we broke out here, we came back to hold this level. And the same thing goes. When we broke out of here, we came back and back tested the highs here. And if we keep doing this over and over again, you could start to see technically we're just building structure. We're building essentially higher low after higher low after higher low. And that's a bull run. That's a bull trend. So this is not bad, all right? The problem with the market right now is that it's clear as day that a lot of the liquidity is going into the stock market, and the liquidity has been removed from the crypto market, and that could be normal just because it's the end of the year. I do remember last week, like that was sort of the time frame for people who are in the market to do tax loss harvesting, and you could be doing it up till the last day of this year, but I don't want to jump around too much. I'm just letting you know my feelings. In the short and sweet of it all, if we can hold this closure right here of 46,100, this is completely fine, and I suspect that between the 0.5 fib and the 618 will be where we chop around until direction resolution. So I know that's not like a fun thing to hear, but what have I said in my last 3 videos? I told everyone I would much prefer January to be boring and just sideways and build structure. And I know a lot of people don't like that, but if we see Bitcoin holding structure, meaning a bullish structure where we're getting higher low after higher low with slightly higher highs, and we're just building that parallel channel like I was describing a couple minutes ago, this is very bullish for the altcoins, okay? So all things considered, it's pretty normal. All right, when altcoins have a large correction following Bitcoin's correction, that that boredom in Bitcoin will make altcoins exciting here and there. They'll pop off here and there. So we've seen that again and again. We've seen over the past week where one random altcoin will be up 15, 20%. Like we saw Vitho do it the other day. We saw Icon do it 2 days ago. We saw earlier today Zilliqa was doing it. It is so normal at this stage where we'll just see after a large correction in Bitcoin and sideways for Bitcoin, we'll just see these altcoins pop off randomly. So, with that being said, a slight bull trend at the lows of this like 40, like mid 40K region, that's really welcomed at this stage. And I think an immediate blow off like would not be fun. That would be very dramatic. And of course, it would cascade in this FOMO. But the more fear and the more boredom we have in the market, the more weak hands leave the market. And that should be something that you guys want. Sophisticated investors should want the players that were only here for the short term to get out because they're the problem of the market anyways. When you have these big liquidation events like this, the reason why they happen is not necessarily because the whales are just pushing you out. It's because too many people are thinking the same way at the same time, and that could create a huge liquidity event. And when it's all on leverage, that's why it gets bloody and dramatic, and it completely transitions the sentiment of what we were seeing prior to that. So I'm just letting everyone know this structure that we're getting right now, it's very normal and it's fine and it's nothing to be scared of. Now, the hopium would be any break of this trend line on a daily close. Let's just call it 52K. And 52K could be resolved by early January. That would be totally fine. I mean, honestly, it's only about 7-8% up, and Bitcoin does this in its sleep. So 52K, not only getting above these prior wick highs, this wick high here, but we would be getting above pretty much all the key moving averages. I'll show you right here by removing these drawings. We'll be getting above that 34 exponential, and that was the big problem. So we've yet to have a daily close above that 34 exponential, going all the way back to November 15th when Bitcoin was around 65,000. So that 34 is the real problem here. And on the support side, it's that 200 simple moving average that we look for holding. Daily close today above that level would be great. Even if we close daily below it, I would not be worried. It would be if we start closing dailies with a new low. So you can see these are the candle closures right here around 46,200. Any closes below that, that's where it gets a little problematic. But we've seen this before, where Bitcoin will pop up pretty dramatically, come back down through all the key moving averages, and then even trade below the moving averages and still build a support level. Okay, so that's why I'm saying if we were to come back down to these 46s and just hold those levels for a little while, that would not be weird, that would not be bad. Even if we wicked below it for a second, that's Bitcoin. It does that shit all the time. I remember back here, we had this pop-up rejection after the two back-to-back eclipses, and then we literally made a new low. But that was a huge bear trap because this right here, people thought was like the end. They thought Bitcoin was going to 10K. And then it came up. Again, it liquidated all those shorts. Then same thing happened. It's just this type of price action that we get is something that I am not gonna not take into consideration. I've considered this so many times where we have these back-to-back eclipses and then a boring, arduous sideways and down market until we get resolution. So if we were to go off the June 10th of the eclipse and then measure it out until we saw the next, we'll just call it the next high, 133 days. So that would be like going off of December 4th over 133 days. And what we're going to see is sometime in April. All right. But we're just in the process of this right now over here. We might still have more sideways. I'm not saying we're going to go down. I'm not saying we're going to, do anything in particular. Right now, it would just be about structure. And when we're considering structure, we're considering current levels and we're considering the most recent lows. That's all we got to do. And as of right now, we're trapped sideways. So in my opinion, that's healthy. That's very good for the market. And we also have to consider all the tether in this market right now. There is a ton of USDT ready to be deployed, and it's not going to go into precious metals. It can't go into bonds. It has to go into crypto. So with Bitcoin hovering around this 40% dominance, and we've yet to see XRP have a huge shift in dominance to the upside, even ETH is sort of stabilizing. We know in the meantime, when we have this sort of market structure, we could have like a shit coin here and there pop off. But with all this Tether and all of this USDC that's been minted, that's just circulating in this market, ready to be deployed, I mean, it's got to go somewhere. And I would suspect that as many unfortunate leverage traders can get pushed out of this market, then it allocates that ability to start deploying that USDT. And it always happens out of nowhere. And that's why if we remember back to last year, we just saw once we transitioned into the year of 2021, we were seeing these straight line breakouts in a lot of cryptos. I mean, pretty much every single crypto, right when we transitioned into 2021, it started moving up parabolically. Okay, so this isn't for hopium. This is just me letting you know like what is most likely possible as we enter this year, just because most of these altcoins have already completed 80% corrections to the downside, then getting wiped out a second time during Rosh Hashanah, then getting wiped out a third time since the recent eclipses. So take into consideration everything I just said to add a little bit more weight to a bullish continuation over the next 3 to 4 months potentially. So let's talk about downside targets again. Holding that $46,200 level on daily closes would be great. But honestly, like basing around this 47K level is completely normal. It would still be a higher low. Then we have this 200 simple moving average to keep in our minds. Daily closes above that is fine. But anything below this 46.2 on a daily close, I suspect we're probably going to go down to those targets I was sharing last week, which was around 43 to 44,000. All right. Basically filling in this wick. Now, I'm not saying it will happen. I'm just giving you the technicals. Now, for the upside, anything recovering off of that 21 exponential would probably be good to expect this 34 to get retested. But then ideally, we want to see a daily close above the 34 exponential. Every day that we're trading below it, it slopes down and it gets closer to us. So we can see if this gets resolved slightly after the new moon on January 2nd, we could actually see this get to around 50. And then it would be a little bit easier. I mean, price is king. So getting above that recent wick would be showing us that this is a reversal. But until then, I mean, the technicals, that 34, closing above that 34 would be good enough for me to anticipate a move to the upside. And we've seen it when these moving averages start to coil together like they are now, getting above that 34 and then eventually that 55, that white moving average right there, that leads to pumps. So right now, we're just kind of struggling on that downside area, just like we did back around the Rosh Hashanah full moon. So upside targets, I would definitely suspect 50 would be resistance. Closures above the 34 would lead to move up to the 55. I don't think that'll happen that soon. And then on the downside, we have that 46.2 and then potentially retest of the wicks at 45.6, and then anything below that swiping down to 43. Let's go to Ethereum really quickly. So ETH, I believe we had our trend line that we were focusing on still in play. Let me turn off everything. This trend line is where it's at. Again, I've showed you guys this in the last video. We have the prior all-time high, and then we have the Rosh Hashanah fake out. And then we have, since then, we've overcome that prior resistance and have turned it into a support. And we got supported on it on the first bounce to the current all-time high. Then we got supported on it around the mid-December, and then we've recently just back-tested it yesterday into today. We're getting a nice little bounce. This is in alignment with the 786 fib, which is a fib pull that's coming from the prior all-time high down to the swing low, because that's a big volatile move, gives us a lot of data to work with. And we can see that very well, that this 618 got back tested right around here before continuation to a new high. That's very textbook. But since we didn't really have much trading within the golden pocket, you can see we have a little bit of trading there in the golden pocket, a slight amount there, and then there before the breakout. Now the fact that we're back testing the top of the golden pocket, the 786, that's completely normal and that's healthy. And we're just bull flagging sort of into it. You know, we have our flagpole, we have our flag. This could be resolved as a bull flag. We just have to see how it goes. In the meantime, though, we do have a downtrend. We have low, lower low, and we have high, lower high, lower high. So this is a noticeable downtrend, and resolution would probably be somewhere into the 4,200 on 4-hour closes or 6-hour closes. Daily close above 4,300, 4,400 would really be welcome, because that would get us back into this area right here. So let me delete this. So what I'm saying is, pretty much we have a big area right here of trading range where it's hard for ETH to make a decision, and we either pop up for a moment or we pull down. So it's getting above that 4,400, 4,500 area. That would be the next key level. But until then, this 888 is showing us the rejection. So that 4,200 level would be great to overcome. In the meantime, our support is still this downtrending support line. Keep an eye on that trend line, add it to your charts. If this market's going to maintain sideways and slightly boring into the downside, then ETH will probably drain out slowly into the 702, which would be around 3,500. So can ETH retest that level? Absolutely. We saw that was the wick flash on the 4th, and then that was also a little bit of the trading range back here, and that was the Rosh Hashanah fake out. So around this level of 3,600 to 3,800 could be a level of a little bit of play for Ethereum in the short term if we are going to go slightly bearish. So keep an eye on 3,600 if it's going to come to the downside again. Let's go to XRP. Okay, let me remove this. We have a noticeable huge pattern going on XRP, and it's something that, I mean, typically we would anticipate some resolution within 75% of the apex of this move, which I suspect is somewhere around mid-January. So we still have some time. I mean, to the downside, broken down, this would be horrendous if this was to happen, and it would take Bitcoin having a huge move to the downside. I mean, way below 40 for this to play out the entire move if you were to measure from top to bottom. So I'm not really going to get into that right now because that's not as important. But let me pull up some other pieces of information like our moving averages. Okay, so you can see that all of our key moving averages on the daily, the 55, 200s, and this 8 simple are all between this like sub $1 level, and that's going to be a rejection level. Until you could close above that 55 simple moving average, it's definitely going to be a problem. Now on the downside, you do have this support line, and this support line is clear as day. It works. It was working pretty much on the rejection post SEC dump. Then once we got over it around January of 2021 this year, we came down, back tested it, and then after back testing it, we had the yearly high. Since the yearly high, we've back tested it twice on the June and July full moons, and then we've back tested it again since the recent dump in around the eclipse, and we've been playing on this trend line. So it's a very strong trend line. That's the point of what I'm trying to say here. And this tells me that 79 cents on the downside could hold on wicks. Most of the time it's getting into this trend line, it's on wicks, and then it's a clean bounce. But this 80-cent level is going to be what we look at because of all this trading action down here. Now let's look at like a weekly and see if we get any more data in that 80 cent. Okay, perfect. So there you go. So I went to the weekly, and you could see that the 55 simple moving average is right around 84 cents. And that's a key level that typically we like to hold. But, you know, we've seen XRP in the past. It gets it's very choppy. And also, if you actually look right here, the end of the bull run back in 2017, when it went up to $3.30, it came back down to the 55 simple right here, had a bounce, bull trap, and then once it started trading below that 55, it actually corrected down to the prior trading range. So I don't know if anyone has the Bitstamp chart for XRP, but that's the one that I like to use because it goes all the way back to when XRP was like 0.005 cents. So it's a nice chart in that regard. It has a lot of chart history. So we can see that ever since we backtested it post SEC dump around December into January of the new year, we bounced pretty high, and then we backtested it right here. So let me turn off the drawing so you can see what I'm talking about. You see these touch points right here on the 55 in June and July, and lately we've been dancing on that level there. Now, what I do not like is this potential cross coming in of this 8 with this 55. That's a wolf cross. If that happens where the 8 goes below the 55, that will look fucking scary, okay? So that would be a move. You would anticipate the next move down to the clear levels of where these 200 exponential and 200 simple moving averages are. I mean, That would be really awkward to see that happen, but we just have to take the technicals into consideration sometimes because that is what it is. So let's look at this on like a 3-day, because we do have a 3-day closure coming in tonight. We can see that this 200 exponential is a clean area for back tests. So what I just mentioned before, it had to deal with the weekly close, and the weekly doesn't close till Sunday night. So we have plenty of time to get above that 55 on the weekly chart. But let's look at this from a 3-day perspective. We can see that this 200 exponential on the 3-day does play a key level. So keep an eye on that. If we're going to get a move to the downside for Bitcoin around that 44, 43 level, that would be the level that I would anticipate XRP to go to. And it would probably be in alignment with similar RSI levels as well, like somewhere around 36. So when we flashed through it on the eclipse, we did get RSI around that level. We actually got it exactly at 36. So it came down to test the 200 around 36 RSI on the 3-day chart. Same thing here. And then once we got that bullish wolf cross there, we did pump a little bit, but it's been coiling up since. I mean, this chart has really, really, really been coiling up, which is a good thing, because the more time we're sideways and we're building up, like it's like a bottle that's been shook and it's going to explode. So that's why I had a little word of caution before with potential downside, because whatever potential downside we get, if it starts breaking structure below 51 cents, I mean, then it's going to be a bloodbath. So given that this market is seemingly bullish on Bitcoin and Ethereum, I don't anticipate that to happen for XRP, but flash crashes to those levels they could happen at any time. We have to be aware of that. So 2-day close, definitely something to consider here, because we're coiling up on the 200s as well, showing a support. I mean, ideally getting a 2-day above that 8 simple again would be ideal, but until we're getting above that 55 at $1.01, it's going to be sideways. And how much longer can this thing go sideways is really the question. So when it comes to downside targets, I would anticipate 77 to 78. It would be ideal to hold 78 cent on a downside close. And then when it comes to upside, honestly, until we're trading above that 55 simple with an eventual wolf cross of the 8 simple crossing above the 55 simple on the daily chart, that's upside implied. Until then, I mean, we're pretty much going to be trapped below $1. So right now, what we're seeing, definitely something to be cautious about. I would not be entering big long positions on these altcoins right now because of the time of the year we're in and how sketchy it's been. And I just want everyone to be safe. I actually did start accumulation today of a couple coins that I like Icon, Zilliqa. I believe I got some Vitho. So I'm accumulating coins. It's just because of the structure and kind of how historically January has played out. But I'm not going all in. Whenever I make investments, I try to do up to 20 positions per coin. So that means if I plan to buy XRP, I would buy 20 times, which would be like 20 days straight of buying, or buying every dip. That's the way that I like to dollar cost average. That's what I used to do with XRP back in the day when it was below 25 cents. This whole time back here, I was just dollar cost averaging for like 200 days straight, pretty much. I remember this all vividly before the pump up, which they said was for flare. And then we had the SEC dump, and that was when I completed all of my final accumulations below 20 cents. So you want to be a long-term investor, and you're getting these long, sideways, arduous consolidation ranges. You want to take advantage of these dumps, and it would be more advantageous for most people to take advantage of buying the dips than getting so caught up in trying to trade the swings. So one takes a remarkable amount of skill. The other, all you need to do is wait till the market is extremely fearful, and then you buy that dip. When the market gets extremely greedy, you could determine if you want to de-risk. It's very simple. If you wanted to learn TA and how to actually look at this market from the perspective that I'm sharing with you, of course I have my courses that I sell. My Mastermind course is a basic course where it teaches you the foundation of investment thesis, building your portfolio, learning how to read the charts, doing your own technical analysis, and then it actually starts moving into implementing Gematria Numerology Astrology. And that's a package deal where once you start learning all of those things combined, you can build a long-term investment thesis. And then with my advanced trading course, which is also on sale, I do teaching how I leverage trade personally, which again is very conservative. I'm a long-term swing trader. I wait for setups. I do not like daily trading. I think that stuff is It really ruins a lot of people's lives. It makes people just sitting on screens all day. That's not the way I like to do it. So my whole method is trying to stay calm and trying to have a long-term approach. And on the sidelines, I do swing trades, and I've enjoyed doing that now over the past year and a half because it's a lot more comfortable for my lifestyle. It's a lot more comfortable for where I'm at emotionally, consciously at this stage of my life. And yeah, so I essentially designed those two courses with that in mind. You could consider it as part one is the mastermind course, part two is the advanced trading course, and all things considered, along with the Gematria masterclass that I have within the mastermind course, it includes all the information that breaks down my methods. So anyways, for those of you that were interested in that, you have my website, watersabovecrypto.com/redpill2021. Both of those courses are on sale until New Year's Day. So as we transition into January 2nd, that's when the sale will end. I'm probably not going to be doing a sale for a while after that because I was running sales all throughout Black Friday and months prior to that. So anyways, take advantage of that. If you guys had any questions or anything, feel free to leave a comment. I appreciate every single one of you. Have a beautiful rest of your day in the Matrix. Much love.